What is going on YouTube? It's Brendan from Market Makers. Guys, take a moment, like and subscribe to this channel, and definitely follow us on our Rumble. You can go on Rumble, type in Market Makers. You will see us. You will see our logo. Link is also in the video description. And do take a moment, if you are going to trade these markets, check out our links in the video description for our sponsors. BITGET for the cryptos, SimpleFX for everything else. The tutorial guide is there as well. If you want to trade with us, guys, the join button right underneath this video literally says the word join because it's fully integrated with YouTube. So you can join our Discord right through the interface there. Love to see you guys in the room. All right, let's get into the charts. So we've had, what are we on now? This is back-to-back rally days. We dumped on Friday. Thursday was an up day, but I'm looking at these back-to-back rally days. We did whipsaw a little bit today, so we need to look at what the pressures are on the market and where this thing could peter out and potentially roll over. We're going to look at equities, we're going to look at cryptos, and we're going to get through it all, give you guys the information you need. We are also in the beginning of the earnings, okay? We're in the beginning of earnings, and most of the companies you guys are going to want to see, the important companies, are going to be next week, okay? It's the bulk next week, but tonight after hours, we do have Netflix, and tomorrow we do have Tesla, and I think Tesla is going to struggle a little bit with its numbers, but we shall see. So guys, the 10-year yield. 10-year yield has been absolutely parabolic since the pandemic crash, okay? It was like what was this, 0.39? I mean, it's really low. Let's see, where's the low? 0.398. Okay, so spot 398, and as you can see, we're following this parabolic curve, and up here you're up at the 1618. This is the highest, by the way, the 10-year yield has been since, guess when? Since before the great financial crisis, okay? A lot of the market cycle is repeating what's happened in the last 2 3 sigma bubbles. Whether it's the yield, whether it's the DXY being up at the Y2K crash high, or getting close to that Y2K crash high of 121, everything moves in a cycle, guys. There is nothing new under the sun in the market. It's patterns that repeat themselves over and over. Now, a lot of people I hear on TV talking about how 4.0 could be the top here. You can see we're hitting the 1618. I think when that Fed rate hike comes in with the 75 basis points on November 2nd, I think there's a possibility, especially depending on what guidance they give. If they remain super hawkish, you know, this could easily break up above this, and you could be pushing your way towards 5, okay? So you could be pushing your way towards 5%, which this would absolutely create a market. If you have the 10-year going up and you have the DXY going up, which the DXY is trying to find support here around 111, 112, and we'll see, again, when that rate hike comes in, I expect more strength. We got hung up here at 114, but I have a target up here of 116, and I think it will get there, guys. If you can flip 116, 121 is where you're most likely headed. Again, that is where the market cratered in Y2K. Boom. Okay? So, again, the cycles all repeat themselves. But let's see what happens, and let's see what happens with these earnings. So far, there's only been a handful of companies that have come out. Mixed bag, but overall, the earnings are not as bad as people feared. So far, the market's put together a couple rally days. And why is the market rallying? Why is the market rallying? Well, to me, it's just literally because it's oversold. You have people short covering, you have people off sides in the market, but there's nothing fundamental. Think about it. When I say fundamentals, I don't mean fundamentals of the company. What has changed in the world outlook that's better today than it was last month? What has changed? Everything has gotten worse, not just in the U.S., but globally. Look at the debacle in England with the sterling, the pound. Look what's happening around the world. The conflict is escalating. Everything is getting worse, but just on an economic level, every central bank is raising rates, okay? Now, we still have people. So watch my Rumble tomorrow. I'm going to upload a special video tomorrow because what I do on YouTube, guys, Sunday, Tuesday, Thursday, that's my video days. Those off days, I'm going to be putting some special videos up on Rumble. But watch my video tomorrow. I think you guys will enjoy it. And I'm going to do some commentary and show you guys some clips. But there's still people on TV talking about they don't see a chance for a recession tomorrow. They don't see a chance for a recession even next year. So, you know, this is the world that we're dealing with, okay? You got the bulls and the bears. You got people that think this is a market bottom. You got people that think this is selling back off. So we're going to dig into this. What I think's going on right here, guys, this is the weekly 200, 233. We're looking back at the great financial crisis. We've been over this before, but this is what you're doing right now. On the S&P, you got pulled down below the 200, 233, and what happened? You rebounded. Came back down, rebounded. Came back down, rebounded. This is the turbulence that you're getting around your long-term moving averages. Completely normal, okay? It's completely normal. You did this in 08. You did this in .com. Same thing over here. You got pulled down. You rallied really big back up. Then you came back down. You retested it, and you finally lost it, okay? So this is, everything repeats itself. So this is what we're looking at. And let's look what Tesla did since they do have earnings tomorrow. Tesla did pump up today, 223.84. Tesla was down at the 618 at 205. So we'll see what happens with these earnings. I think Tesla's one of those candidates that you could start seeing some more topping actions, some more downside. So looking at the S&P, you can see right here at your 200 and 233. Where are we at here? On the 200, 233, you lost the 200. You came down, you rested on the 233, you wicked down below it, and now you're getting your rebound, right? Remember, it's like pulling a rubber band. So you had price push down your moving average and you slingshot back up. An obvious target here, if this does want to rally more or have a little bit more upside, where would an obvious target be? Where you got to before, right there, which is at 382 at 38.08. You're at 37.48. I don't anticipate this. I hear people on TV talking about 4,000, okay? Now, from a Fibonacci standpoint, makes sense. But I don't anticipate this going that far. I just don't. I think we're getting late in the year here. Now, seasonally, you know, you can have a bigger rally. But again, I think everything is starting to come in a little bit worse. I think this next rate hike is really going to put the clamps on the market, and especially the following rate hike, knowing there's another one coming. So we'll see what happens. But I kind of think that 38.08 may be our top, which is exactly where we got to before. And then look at that supply that just got dumped on that candle. Massive amount of supply. Smart money, or if they are smart money, they're going to sell up here, okay? They've been selling into this rally already, I am sure. And let's go ahead and look at the S&P on the daily. Daily, we pumped up to 1 fib, 37.36. Now, we were below it at different times during the day. We did pump up above it. For me, you want to see if you get more of a breakout here to see where this can go. Want to see us break this previous pump high, okay? And that's at 38.07. So we're, whatever, $50, $60 below it right now. So we'll see if this starts rolling over on the daily, because when we look at the S&P, let me go ahead and get rid of some of this stuff so you can see us a little bit better. We look at the S&P on the 4-hour time frame. You're starting to cluster up in your candles here, okay? So you had a lot of volatility today. You got a little bit of a whipsaw action. Now on the 4-hour, your long-term moving averages on the S&P are still above you, okay? So they're still above you. Here's your 38.03 right here, which is your 1272. Now you're right here. This candle is right here. You got up substantially higher, 37.68 almost, and then you came back down all the way down to like 36.83 in that previous candle. And wow, that big whipsaw. That was a big whipsaw today then. And if you look at this, let's go ahead and look at this on the 1 hour. The 1 hour, you can see this volatility. Okay, you can see it going up and down, but you're starting to move sideways a little bit more. We'll see if you can break out and break above, but I just don't see us going much above 3,800. Most of the fib layouts that I'm looking at, regardless of time frame, all have a significant fib at the 3,800 level. Let's look at the Nasdaq. Nasdaq came very close to our target already, the target being 10,179. Nasdaq got down to, on this candle, 10,427, within a couple hundred points. Okay, got within a couple hundred points on this low. So, you know, right now the Nasdaq's trying to pump back up above its 200, 233 on the weekly time frame. You're getting some rejection here. So, again, this is part of that turbulence of being around in this area, and we'll see how much follow through the Nasdaq has if this continues into another day. Nasdaq on the daily, of course, pumped up as well. Got hung up on the 1 fib, 11,264. So tomorrow will be the third day. Tomorrow is the third day of the rally if it continues to rally. But, you know, again, all these rallies really to get this double bottom type effect, you really need to break above this point, okay? the midpoint of that double bottom. You really need to break above that, which is 11,669. So that's where you got to get above to get a little bit more bullish. You get some more upward momentum. And then let's go ahead and jump over to the Russell. Russell, same thing. Russell got big supply dump on the daily candle here. Look at this. So the Russell was pumping up. It was outperforming. And you got the Russell all the way up to 1787. And it's at 1764 right now. It got all the way back down to 1740. So big volatility here. This is a 50-day moving average up here on the Russell. But, you know, the Russell, again, you got a nice double bottom in here, but you already got a big supply dump. So we'll see what happens with the market. If the dollar starts moving back up, if the 10-year stays above 4%, like it did for most of the day today, closed a little bit down, but it stayed above 4%, I don't see these rallies going any type of extended period of time. This could just be a 2-day rally that begins to roll over tomorrow even, okay? Now looking at this on the 8-hour, you can see again that double bottom structure, your 200, 233, all up here higher above you. Now on the 4-hour time frame, you're intersecting with your long-term moving averages. I have a trading range up here, as you can see. Got a big wick up here right up to that 1786. Then you got a sign of weakness, came back down, and now you're stuck back in the moving averages again, okay? And price again is at 1764 right now. So you're starting to build some type of top structure. So we'll see if this top structure looks to start breaking down, maybe form a double top, or if you look to try to break out more to the upside. But I think the end is near for a lot of these things. Let's go ahead and look at Bitcoin. Bitcoin Dante's Descent. You guys know this pattern by now from watching this channel. Running out of candle space here. So remember, this is a bottoming pattern. So wherever this Bitcoin candle is, according to this pattern, not this week, but 2 weeks from now, right? So you have this weekly candle is the candle you're on now. Next week's the new week, and then it's the following week, that October 31st, November 6th. So that's going to be our, according to the pattern, a bottom, right? A bottom just like this where you would trade that upside. A bottom just like this where you would trade that upside. And just like this, trade the upside. And again, based on these two previous upsides, looking at a 50% move in Bitcoin. So that could be really fun. So we'll be looking forward to that as well. Now, looking at Bitcoin zoomed in on the weekly, again, just very weak price action. Not a lot's changed, and you can see this on the daily because 2 days ago I made my video and you're on this candle. Okay, nothing, the range is really, really tight as you can see. Now, let's go ahead and take that off. Let's look at our reverse engineered RSI, and man, you are still, look at this, bottle up. I mean, guys, this, not to be overly dramatic, but you can see how tight this compression is versus the expansion, okay? When we do move, and again, I do believe that move's going to be to the downside, but when we do move, this is going to be a big move, a big explosion down. Bitcoin at the time of this recording is what, 19,250. You know, that's another reason I don't think necessarily this rally in equities has a lot of legs. Bitcoin didn't really move that much. And Bitcoin, of course, is viewed by the money managers as a risk asset, right? But you would think with the markets rallying, having what I hear people calling a face-ripping rally, you would think with the markets rallying, you'd see more upward momentum in Bitcoin, and you really didn't get much of anything, right? So again, I just don't think, I think these rallies are essentially low volume rallies. They appear to be low volume rallies. They appear to be just people covering their short positions. Again, people being off sides in the market. And of course, you always have a little bit of that retail FOMO with things just being discounted to a point where they think it's a great buy. Okay. And that's what you get because price moves in waves up and down. Now, if we go ahead and let's look at Bitcoin on the 4-hour, where the action is, because once again, I have my VWAP here and we got up to this line. You have your 200 moving average providing you a rejection again. You have your 233 providing you a rejection again. And guys, if you are trading at home, again, we've been over this many times, but just look at these areas if you do want to do some trading, okay? Look at these areas, and even when you get above it, you tend to make shapes in the 4-hour time frame and a primary downtrend. These are all trades. We've been over most of these trades. Did it last video. Not going to spend any time on it. But again, just pay attention to this. But I don't anticipate, guys, I don't anticipate Bitcoin pulling down without the Russell pulling down, okay? And the indices are pumping right now. Again, I do believe it's a rally to fade. I think all these rallies are rallies to fade. But Bitcoin, I think, is going to stay super tight. And when you do have a break, when you actually have a break in the Russell, which could, again, with the earnings, I don't know what the earnings are going to be, but with these earnings coming out this week and next week, again, pivotal time period, because I have that bottoming pattern October 31st to November 6th, right? So these next 2 weeks are going to be pivotal if we get that directional change down to the downside to see how far down we can pull at that 1521 target on the Russell. But if these equities do start dumping hard because these earnings from the big companies, think big tech, right? Think Apple, think Amazon, think Google, think Microsoft. If these earnings look to disappoint, you're going to see market movement, specifically in the big indices, and you're going to see Bitcoin react to that market movement as well. And that's when I would anticipate a downturn, okay? Now let's go ahead and look at what else we got. Bitcoin on the 1 hour. Bitcoin on the 1 hour, long-term moving averages don't really do much for me here. When you start getting these smaller time frames, and again, I don't scalp, guys, so other people could obviously have an opinion about that. But I just put things in trading ranges, and you can see we broke down a little bit. But this is only a couple 100-point drop. And, I was just looking at this because you had a nice little Wyckoff structure here. And I want to share this with you guys because you had your rally up, right? So you get your buying climax, you get your reaction, and then you have your volatility, your up thrust. But this is what I was always talking about, guys. I try to show you these examples as I come across them because people ask me all the time, what do I mean by like the inverse cup in the cup, the Livermore pivot, as Wyckoff affectionately called it from his friend Jesse Livermore. When you come up, you roll over, you're back testing your support, and you pivot out. It works the same way to the downside. You see these candles? So you start to break down, you printed a double top on a 1 hour time frame, you break down and you pull back up. You see that? You pull back up and then you pivot down. That's your cup, okay? And you pivot down, you shot down, you found support at the 618, 19125, and you came back up, and once again you're testing that base of your range, okay? So it's just a combination of trading with Wyckoff structures. Just wanted to share that with you guys. Ethereum, looking at this as well. Ethereum, again, I don't trade mid-range here. I want to be up here for some more resistance, and here's your 233 as a matter of fact. Down here, obviously with your 618, remember this is the Ethereum 618 box. Outside of this range in a primary downtrend, if you do believe the markets have more to go down, then these are opportunities to short, okay? And then coming down to these bottom areas, potential opportunities to long, as long as you're staying in a confined trading range, which I do believe you will be as long as Bitcoin's staying in such a tight trading range as well, okay? Now, let's look at XRP. XRP finally starting to show a little bit more weakness. That's at 46 cents. XRP's holding up on top of our Wyckoff structure, though, so we'll see how long this continues. And again, always looking at your structures, but you do have like a very disjointed double top here as well. Just be aware of that. If the equities do start to pull down here in the next week with these earnings, then you're going to see cryptos also move as well. So always know where your support levels are and your resistance levels are for things you're looking to trade. Gold, what do we do on gold today? Gold here on the 8 hour time frame, where we at 1652. So we're still below our 1672. A lot of chop in this range. Not a lot of movement up or down on gold. Not a lot of movement up or down here on silver, 8 hour time frame. So just very, very tight trading range. And then what we got? We have oil. Oil came down. Oil came down to almost 82. Okay, so it came down to about 82. It's pumping back up a little bit. But we talked about this before. Remember, this is a daily time frame. And you may be setting yourself up here for a double top back at that resistance level. Okay, that'll be interesting if we do. Interesting trade setup, which could easily get invalidated by oil going back up because it's a very tricky asset. The Biden administration is going to keep putting 1 million barrels a day on the market because they wanted the Saudis and OPEC Plus to wait. They wanted them to wait another month before they did their cuts. And why would they want to wait another month, guys? Because the elections are coming up November 8th in my country for the midterms. So they wanted to have gas as cheap as possible. But after that, They don't give a shit. They don't care, okay? So they just want OPEC to wait another month, and they're not going to, so they're going to keep dumping oil in the marketplace. So we'll see how that goes. It looks like the Republicans are going to take the House, potentially take the Senate. People are really upset about inflation. People are upset about the economic conditions. People are upset about funding a proxy war. Lots of different opinions on that. But people are upset about these things, and I think you're going to see a sea change in our Congress. So we shall see, guys. It's a few weeks away. I'll talk about more of that stuff on Rumble, just because I have more freedom to talk about politics and world events there. So again, definitely check out tomorrow's video. I'll send out a tweet when it's uploaded, but go ahead. We're going to upload all these videos to Rumble as well, so you can just view it on both platforms, set your alerts over there, and definitely subscribe and like to this channel, guys. And I appreciate you guys watching, and we'll keep our eyes on the marketplace, because this rally to me looks like it's getting near the point where it's going to turn around, guys. So let's go ahead and keep our eyes on this. Watch earnings. If earnings come in super strong, more upside. Earnings start to disappoint, we're going to start fading out. I'll talk to you guys next video. Talk to you guys on Rumble tomorrow.